This pattern on Nvidia is really simple and really easy, and I think it's going to give really big clues as to whether or not this time is different, or if we stick to what's working like AI, according to Tom Lee. Please pay attention because this pattern's really easy, but it's going to provide a lot of clues. Lots of gaps, lots of gaps. New all-time high with a bearish engulfing daily candle, new all-time high with a bearish engulfing daily candle. Then what do we get after that? Well, that's the interesting part. Are we actually going to go lower? Let's look at what happens after this day right here. So day number one, we get a bearish engulfing daily candle. Day number one, bullish engulfing daily candle. Candle number two, close below the previous daily low. Candle number two, close below the previous daily low. On day number three, close at the high of the day and form a daily higher high. Day number three, close at the high of the day with a daily higher high. Why does this matter so much? Well, because for us to invalidate the pattern, all we need to do is go to a new all-time high like we couldn't here. If we print a daily higher high again, that means we're also invalidating the dead cat bounce. So that's like really simple. As of right now in after hours, we're looking like we're going to gap up again tomorrow after a record daily closing high. So if we manage to get above 1159, I think that's going to start to invalidate if we have to go lower. This is a really big if, right? I'm not entirely sure here. So let's listen in to Tom Lee and see what he had to say about stick with what's working. All right, Tom, take it away.
I'm good to see you. So you're still bullish heading into June. You say there's too little investor confidence, too much cash on the sidelines, but it seems to be flowing in now. So how do you invest and not get burned by volatility?
Well, it has been one of those years where, investors have been hesitant all year, and I think we have had some short pullbacks, but I think the best strategy for investors is just really stick with what's working. And what's working is AI related names, whether it's Nvidia or highly correlated stocks like Cadence or.
All right, that's pretty much it. So this interview is not very old. It's only from a few days ago, but let's see whether or not we can pick up on the story and find a little bit of evidence. So let's close out of here. This is from 5 days ago. And what he's talking about is that there is a lot of money sitting in money market funds, $6 trillion, maybe even more for the first time. And remember, after we have a nice May, which is 5%, buy in May and go away, apparently. Normally, we're up by 9% in the next month. So what I really want to look at here is whether or not I can find evidence for what Tom is talking about. I can see a little bit here. First of all, we've never seen this much money ever in the money market funds. Okay, that's important. And normally we have a year's worth of returns in June, when normally we don't do much in the summer, sell in May and go away. Here's some evidence. So when I look at what Nvidia did, and we look at the headline here, Nvidia's market cap could more than triple to 10 trillion as it enjoys impenetrable advantages over AI rivals. So who did they take a shot at yesterday at Computex? Well, pretty much all the other chip companies. Well, AMD's down 2, Intel's down 2, HP's down 3, right? They showed some networking stuff. They also showed some switches. SMCI is down. Man, it's like only Nvidia and Micron are up. Micron makes memory. Nvidia makes almost everything else. Who else did they take a shot at? Well, ChatGPT. Microsoft's a little bit red today. Not by much, but it's notable. And then over here, they also teased out a partnership with BMW for a self-driving car. And Tesla's down. So what does that tell me? Hey, Tom might have it right here. Stick with what's working like Nvidia. And maybe it's going to really take over the whole world. All right, let's see whether or not we can pick the story up, because we've talked about what we really need for us to go substantially higher from here. We're 9%, 1995 on the left-hand side, and the 2020s over here on the right-hand side. Hit the 50 MA twice, like number 1 and number 2. On number 3, get close to the 50 after making a new all-time high. And then after number 4, we just go straight up. This will be particularly important because today we actually got a little bit of a slam like we did on Friday. What does that mean? We got a dip and it got bought right back up. Let's see what happened here. Oh my goodness. Do you guys remember what happened on Friday? Pump, pump, pump. Well, same thing happened here. We get a bottoming candle with some volume, and then we just don't look back. Notably, into the close, we rallied by from low to high. Man, that's a pretty big push. That's about 2 points. That's about a third of 1%-ish, maybe a little bit more. So why does this matter? Well, because the bears are trying to capitalize on the gateway for the bears, which was at 524. So what's the significance of 524? Well, I'll tell you that in 1 second here. First, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel. I would greatly appreciate that. So the reason why 524 was so important is because it's our pivot. We went through this on the weekend video as well. So what's 524? It's the March and April high. But let's look a little bit closer here. I'm going to look at the O, the high, the close numbers here. If we go back to March, the close is 523.07. Okay, where did we open the month of April? Well, it's at 523.83. Okay, we closed at 501 point. Anyways, why do those numbers matter? Well, because look at the low we printed for the current month. It's 522.6, which means we tested both of these numbers here. We tested the open for April, we tested the close for March, and we passed. We got another buy the dip, right? They bought the close up. That's a massive daily candle here. Look at those big pumps, right? These bulls are large and they are in charge. So we closed basically flat, but these big tails here are a really big clue for me in addition to the volume. Why? Volume usually precedes price. So if we're going to go higher, this is exactly what I would want to see. How the F are we going to go up 9% in June if buyers aren't willing to step up on key areas, meaning pivots, which is exactly where we expect to find buyers? Please also remember, this is close enough to a 50 DMA, which means that we don't really want to be messing around here. We only want to go up. 524.6 is the key area. As we can see here, we now have a hammer on the weekly chart, and we got a nice little bounce. So this is important because it's also looking like the same thing over here on the NASDAQ. We got a bounce right off a key area, which is what? 448. We know this area. It's the previous all-time high, 448.64, like the red number suggests there. What's our low of the day? 444.7. That's right. The bull showed up. They bought the dip, and all we had to do was fill one gap so far and did not even quite test the 50 DMA. This is important because if now we fast forward to this chart and we look forward to this pattern here, if this is truly where we are, we don't really want to see very much lower candles. We want to see a continuous move higher, which is kind of what Tom Lee's also suggesting. If we look here, we also advanced by 3 points, which means that the bulls are starting to get a little bit of momentum, and maybe we can push back into greed. A month ago, we were in fear. Do we buy fear or do we sell fear? Or normally we buy it. Okay. And today we got a little bit of a shock because ISM came out with a nasty number at 10 a.m. And that's really what drove the market down. Gap ups are for selling. But the interesting part is that we did get follow through. So the bears at 10 o'clock did have a reason to slam the chart. But what happened? The bulls bought it right back up. They said, thank you for the dip. And we closed right near the high of the day. So that's the reason why we went down. We had this ISM number this week. Man, we got some important data. Tomorrow, we got JOLTS job openings at 10. We got ADP non-farm payroll on Wednesday. Bank of Canada expected to cut rates. ISM non-manufacturing initial jobless claims, ECB, and payroll Friday. It's a jam-packed week with economic data. But please remember, on yesterday, we talked about how if Nvidia is going to take over the world, man, it could still triple from here to go to 100 times PE like Cisco was in the 1999s. So what does that mean? We have to understand what Nvidia is currently priced at. If we look at the forward PE for the heat map here, what does it show us? Well, it's still a lot cheaper than Tesla. So when it says, hey, Tesla, I'm going to come eat your lunch, I'm going to work with BMW, a premier, right, car company. Well, this 53 PE seems pretty rich compared to the 32 here for Nvidia. We look at other tech names like, I don't know, Amazon at 30, Microsoft at 31. Nvidia doesn't really seem all that bad. Why? Because they got incredible growth. Look at this. Look at this data center growth. Boop, right? Oh my goodness. And what they talked about yesterday at Computex, man, these numbers are impressive. DJX Blackwell looks like it's going to take it away. And what's really important is that with the backdrop of 1995, we have to think about whether or not we are actually early into this AI move. I think we are. If I'm right, this is going to be the outcome. But I need to see something from Apple coming up on the 10th. We talked about that too. So we got 2 rate decisions. We got a payroll Friday. We got Worldwide Developer Conference. Then we got the Fed. If we're not higher by June 13th, something's wrong. So when you're taking your break on June 14th, right, Juneteenth, please remember that. Your stocks should be higher from where they are right now if we're truly going to go higher. All right. And then all this Tom Lee stuff about, hey, 5,700, labor shortage, big booms for tech stocks, right? We're going to go a lot higher. And I went through this stuff on yesterday's video too, which I'll leave for you at the end. But what I want to finish off here by talking about is just the fact that there were a couple of weird things that happened in the market today where Berkshire Hathaway on their Class A stock was actually down by 99%. This $631,000 stock went down to 185. Whoa, right? What the hell happened? Well, they said they fixed it, but there were some artificial halts happening on stocks today. So something's a little bit funky out there. Something else that's funky is that E-Trade considers kicking meme stock leader Keith Gill off the platform. They're like, buddy, you're making too much money. You got a $200 million trade. Sorry, you got $150 million in shares. You got $65 million in calls. You got $30 million in cash. Man, you're rich enough. Get off the platform. You're messing with our stocks. So that's it for today's show. If you want to watch more about Nvidia, click on the video on the left. If not, maybe you want to smash a thumbs up, subscribe on the right, and come hang out with me at 9:30 tomorrow. Thanks so much.